This is the 10-Minute Contrarian Podcast. This is VP. We're a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 174 is brought to us by Bybit and Apex Pro. Do not forget about them. It is DeFi, which means everybody can use it because everybody should be trading crypto. I just put out a tweet asking how many of my Forex traders traded metals. I don't think the number is going to be nearly as high as it should. If you have an advantage, and you all should, why would you not step into these markets? If you ever have a disappointing year in Forex trading, and we all have, things like metals and crypto can really make up the difference. And I have you all hooked up down below in my links. You have Bybit, of course, and then you also have Apex Pro, which is DeFi, but is open to everybody, Americans included. I've met a number of Americans in my travels that use it right now and do it professionally, by the way. Links are all down below in the show notes. Get yourselves started today. Don't wait. It is the 10-Minute Contrarian Podcast, Sunday edition. Thank you all for waiting a day. I got really sick on Friday night, but I have since made a full recovery. So here we are. I will try to get this episode out before the NFL starts. We'll see how that goes. But what we've been doing lately, if you guys are just joining us, is a kind of a mini-series, not really a course, but we've been talking about what to do after all of our asymmetrical bets have paid us handsomely, and now we have this nice little nest egg of investment money and don't quite know what to do with it. Now there's good news on two fronts. One, there will probably always be some type of asymmetrical market out there that makes sense. There will be many that don't. Usually when you see these recoveries, they're very prosperous and very opportune for the wrong people, but they're always going to be there. And we can take a lot of what we've made and actually, make it grow at a reasonable rate and compound like the rich people do. And not only that, we can do it a lot better than they can. And we've spoken about that too, with our ability to read technicals and by zooming out and using the monthly chart. And all these things were their own episodes. So if you want more details on this, you can simply just go back a little bit. But by understanding this part of the game, mixed with also understanding dividends, we are already at a major, major advantage compared to most people, and really compared to most funds out there as well, and institutions. But we need to take it even further, because unlike trading Forex and trading metals and trading crypto, this is also trading to a degree. It is more investing, but we're still using charts. But there is another element that enters into the equation here. We all kind of wish it didn't, but it's not going to go away. And it's the reason why it's the reason why I even said at the very beginning of my channel how Forex is such a better market to trade, because we don't have to worry nearly as much about fundamentals and fundamental analysis. Now, there is news avoidance, which has become a much bigger pain in our ass than it was before in the Forex world. But it does play a much bigger part in stocks. And we need to figure out what to do about that. Now, one way is to get really good at learning how to evaluate stocks and pay close attention to the news and earnings reports and things like that. And if this is something that really interests you, like really, really interests you, then, vaya con Dios, go in, go deep. It can be quite a thing to learn. But for the rest of us who don't have time for any of that, there are far superior ways to go here. Because look, let's take it back to Forex trading. There are going to be times where, especially if one particular currency has been, quite strong or quite weak, to where you are going to get multiple signals on the same trading day. Now, what we're doing here is going month by month, but still, we're not talking about a combination of 8 different currency pairs, or 9 in some people's cases. We're talking about the entire stock market and all of the ETFs on top of that. We're going to whittle it down some because of dividends. But like we also said earlier in this series, that it really comes down to total return at the end of the day. So you're going to have a wide range of stocks to choose from. And fundamentally, some of them are going to be in much better shape and in a much better position to do well than others are. And consequently, too, some of these stocks might be diseased from the inside out, yet still giving you a bullish signal on the monthly. And what a kick in the pants it would be to take that signal, yet ignore the fundamentals, when you could have gotten in a much better stock or ETF or whatever we're investing in. A key part of this equation is not just getting the best of it because of dividends or because of our technical analysis, but also getting the best of it from a fundamental analysis standpoint as well. Imagine if you mixed that in and were able to do that part successfully as well. Well, how do I do that, VP? It seems like a lot. Well, here's the great part, is you don't. Somebody else does it for you. Somebody who's actually good at this and has a lot of experience at this. And far more often than not, you can get this done for you for absolutely free. I told you that we had that episode of the Trading Psychology podcast where Rob and I talked about investing psychology. And if you didn't catch it, that's fine. I'll go over a lot of the things we talked about here, because I did mention in that episode a number of routes you can take here. So what we'll do is I'll just kind of go over the entire setup here. Now, we will add some more pieces to it as we go. But as far as right now goes, I just got a question on Twitter about the places you can go for technicals here. And I don't know if I addressed that here, or I definitely addressed it in the Trading Psychology podcast episode. But we'll go ahead and do it here. And I should remind everybody, too, I know I've said this no less than 15 times, but Twitter is not the place to ask me questions. I will not answer you back. You guys all know where to go for questions, and you know where not to go, yet here we are. But anyway, I was going to reiterate this anyway in this episode. So technically, there are plenty of free places to go. You can go either to TradingView, which a lot of you are already familiar with. You can go to Bar Chart. You can go to Market Watch and just simply bookmark it. Have your monthly technical setup right there in place, ready to go. And then fundamentally, there are a number of places you can go that are completely free with an analyst, or in some cases, several analysts, which will rate the stock or sometimes even the ETF in question. You're definitely going to get it with stocks. Sometimes with ETFs, they don't do it. But you just got to play around with these and see which one you like the best. Now, the first one's going to be Yahoo Finance. Yahoo Finance is a tool I use. I know a lot of you do as well. But there's an analyst right there that if you just click on any stock and go over, I think, to the right margin, you can see what they've rated it. And then there is also a place called FinViz, Finviz. This is a really great free stock screener. So for example, if you want to just simply screen out only stocks that give you a 4% dividend or above, for example, you can simply do it there. And it is quite robust. You can really get down into it. But they have their own analyst or analysts, I'm not sure. But they do this for you as well. I mentioned a company that does this specifically called Zacks, Zacks. They even have a phone app. Like I said, they actually specialize in doing things like this. So does that mean their analysts are better or worse? Hard to say, but we'll talk about that in a moment too. And then a lot of times your actual broker will have an analyst in-house as well. I know Schwab does, the one I use. Now, if you want to take this a bit further, you can go with a company called Seeking Alpha. It is $200 and something a year. I've bought them for the year just to try them out, and I'm really liking what I see so far. They don't just have analysts. They do a lot of different things with stocks. And I think it's something that I will probably renew next year. But that is the one paid version I know of. I know there's probably other paid versions too. But it's all right there. You don't have to pay anything to do any of this. Now, solutions time. What do we need to actually be doing right now? Well, you need to put your setup together right now. So figure out from the technical side how you want to go about doing that if you haven't already. And then start testing these things out. You probably are already getting signals on the monthly on some stocks to go long. Either you got that at the beginning of the month or you're about to get it at the end of the month. Cross-reference these with what some of these analysts are saying and what ratings they're giving, and see which ones do you good. And do this on the upside and do this on the downside too. You're going to get some signals for some stocks that these analysts absolutely hate. Now, a lot of times these companies will say, hey, if you just took the stocks they liked compared to the stocks they didn't like, you did this much better than you would have otherwise. But I personally am also interested to see how much my technicals override these ratings. So, for example, right now, I am in a particular stock that Seeking Alpha freaking hates. And I'm not trading it in real life, I'm paper trading it. But I want to see how it does. I want to see how much this stuff actually matters. And I'm also looking to see, because I'm also in another stock that Seeking Alpha absolutely loved. And so I want to see who outperforms who. Now, I also know this is not a very good sample size, but I have gotten this whole train in motion. Because when it really comes time, whenever we have our fall, if it happens, I think it's going to, and then we all get a chance to come in cheap on the recovery, I want to have this well-oiled machine completely set and ready to go. And I highly suggest you all do the same. I've said it before. What is the difference between me and your average person? What's the difference between me and you? Not much. The biggest difference is that I execute, and most people don't. Simple as that. And I am getting ready. Whether this recovery is 6 months away or 5 years away, I'm going to be ready to go. And let's just say there is no landing, and we're going to hit the ground running. And Raoul Pal is right, and we're just going to keep going until 2030 when it all crashes. Well, don't you want to take part in that? Even if I'm still holding on to most of my asymmetrical investments, I'm still going to want to find a way to take part in this too. So I'm not waiting, because putting together a setup for money that mostly doesn't even exist yet is going to seem a little bit crazy, and that's fine. Because I can't speak for you, but I'm not crazy. I'm just early.